If you're a realtor, I've got one question for you. Are you overpaying your taxes? Or do you even know? Chances are, unfortunately, the answer is yes. What deductions are you missing? What entity structure should you be? And are you crossing your fingers come tax time? Well, I'm going to break down for you the top 10 real estate agent tax tips that you should know. Now, my name is JJ, the CPA, and I've got the blueprint for you. I have come up with the Tax Smart Real Estate Agent, the one agent business blueprint. This is for informational purposes. I want to give you an example of what it is that you will be getting if you do the smart choice and take advantage of the real estate series that I've put together for you, especially as realtors. Now, who am I? I've been doing this for 33 years, working with hundreds of real estate agents just like you, small business owners. Here's the deal. I'm surrounded by realtors and I love it. My wife's a realtor. My sister is a realtor. And my bonus daughter is a realtor. And so here's the deal. I am now telling you from what I do every single day with my clients in the tax practice, where I'm in the trenches and I'm telling advisors that are telling their clients what to do with their real estate, how you can go about saving taxes. And with that being said, I have put this together in a way that my wife has determined that this is a good event for her as well. Now, I have put together many real estate courses. I am an expert in this area, but I also do continuing professional education here in the state of Oklahoma. And with all that being said, what I want you to know is that I also put a lot of these free tips on YouTube. I've got a YouTube channel with over 100,000 subscribers, JJ the CPA. And what I want to do here is help you rebuild your business. It's a one agent business. It's a blueprint. And I want to walk you through the top 10 tax tips every realtor should know. And this is all part of the blueprint. I walk you through step by step. Now, the first thing that you may be asking is, well, wait a second, JJ, I've got a tax person. Well, great, good news for you, because now you're going to be able to take a strategy to them for them to execute, for you to put it up on the wall. Now, does this sound familiar to you, that you take them your documents, they prepare their return, and then they give you the results without asking any questions, without going through your numbers, without ensuring that what you gave them is everything that they could possibly need? Well, with that being said, here's the deal. As a self-employed sole proprietor, you're getting a Form 1099. Well, that makes you a business owner. And what you want to be doing is navigating the world of real estate, not just helping your own clients. I want to help you balance and put together a blueprint on how you can go about putting yourself first. See, this isn't just about helping your clients. This is also about helping you as a business owner. So the number one mistake that's basically made when I'm starting to work with new realtors or realtors that have been doing this for years, but they're now just coming to me, is that they've seen themselves as an independent contractor. They're working with a broker, they're working with a team, but you know as well as I do, you wake up every single morning and you are responsible for the output, for your income, for what it is that you have as take home. And I want to empower you. I want you to start thinking like a CEO. And the first thing that you have to do is think through, well, if I'm a business owner, then what is it that business owners do? And with this, you start with a strategy, a small business cash flow strategy. Now, the first thing doing is setting aside money for taxes. Yes, that's the number two mistake that many realtors don't take advantage of, is determining how much they should set aside for taxes when the money first comes in the door, meaning you're getting that commission. Because, the IRS doesn't take money from your checks. There's no one withholding it. You do have to get it paid throughout the year. But how much should you set aside? Well, depending on the client, depending on your deductions and how much you take advantage of, and all the different ebb and flow of your business, What we recommend is that every time you get a commission, you're setting aside a percentage. Now, there's three areas that we really ensure that our clients are paying attention to with every dollar that's coming in with their commission. How much money is needed for their business, for taxes, but more importantly, how about for your personal needs? Now, we definitely encourage our realtors that work their little tails off trying to take care of everybody else. Well, how can they reward themselves? Well, take 1% of that commission and reward yourself. Another 1% to reward, treat your family, going out to dinner, going to an amusement park, or taking advantage of something that maybe they've been waiting on. But you should count on about 45% take home if you're running the numbers on average in terms of those commissions coming in. Setting aside money for your business up front is very important. Now, again, these are averages that we've come up with over the last 33 years, but 3% for marketing. Plan for 5% to go to your vehicle costs, 10% to your other business costs, such as broker fees, dues, closing gifts, etc. Now, we recommend that you set aside savings as well and immediately 5% for the urgent needs. That's your emergency fund. Not money for a rainy day, but money when you need it. And then 5% set aside for retirement, building wealth and setting aside money for the future. And then, yes, on average, setting aside 25% for taxes. Now, that might be 21% for federal and then 4% for state, but this all depends on you. This is what we say on average. Now, we all know that time is money, and so are your receipts. Now, I want you to really zero in on the value of tax deductions. How do we put a dollar to that? Well, it can save you 42 cents on every dollar. Believe it or not, that is the average tax rate on the net income for realtors nationwide that are filing a Schedule C and paying that self-employment taxes in addition to federal income taxes and if there are state income taxes. So the number one that we talked about as being a business owner, number two is the strategy, but number three is don't fall asleep on getting your tax deductions. You're using those dollars to build your business, so make them count with your office supplies, MLS fees, your license, all of those things. But what's also key is keeping your receipts. The IRS does require those to prove what it is that you bought. Keeping receipts in a 42% tax bracket in terms of your overall taxes that are going to the government for federal income taxes, state income taxes, self-employment taxes, yes, can be up to 42 cents on the dollar of taxes that you are paying in on those that you're making. So $10,000 in receipts, okay, backing up your deductions, is then $4,200 less in taxes. I want you to see that every receipt that you save is literally saving you money. Now, tracking your mileage, that is a huge deduction for you. 1 mile right now is a 70-cent per mile deduction at 42% tax rate. That saves you 29 cents a mile in taxes. So 10,000 miles is a $7,000 deduction, or saving you nearly $3,000 in taxes. But here's the deal. If you don't have a mileage log, you will not be able to take that deduction. And part of what we talk through in the Tax Smart Real Estate Agent, the One Agent Business Blueprint, is how to go about these things. The other thing that I provide is the Realtor P&L that I have put together and that my clients work with and deal with, and ensuring that they're pulling together all of their expenses. So as you can see right here, I've given a breakdown to not only provide a list of all the possible realtor expenses, deductions for tax purposes, but then giving you examples, also breaking down what you need for the home office, for your automobile, also for assets that you are buying. And that leads me to the biggest deduction that you definitely don't want to overlook, and that is related to your vehicle. That's the mileage method or the actual expense method. Now, which one do you want to use? Well, of course, the one that's going to lead to the biggest deduction. So for mileage versus actual expenses, here's the biggest key for you to know. Whether you're doing one method or the other, you must know the number of miles that you're driving in a year, and more specifically, the number of those miles that you used for business. Because when you're taking actual expenses, you have to know the percentage of business use of that vehicle, which is then only determined by tracking your miles. Now, of course, if you're doing the mileage rate, that is based then on those business miles, but you have to have a log related to that. Now, that leads me to the next big secret that many miss but think is a flag, and this is the home office deduction. So, the number five, okay, we're not even halfway through of tax deductions that realtors are missing is that home office, okay? So, even if it's a corner, even if it's 1 square foot by 1 square foot, you need to take advantage of it, okay? It's not a red flag. A red flag would mean if questioned, they would deny the deduction. Well, if you only have a $5 deduction for a 1 square foot home office, then them denying $5 deduction isn't really a big deal, is it? But to this extent, you are now getting a deduction related to those expenses that you're spending already related to your home. But let me tell you the real secret to ensure that you are taking advantage of the home office deduction, and that is related to your business miles. See, there are court cases out there where a taxpayer, they did take advantage of that home office. And it wasn't under fire, do they have a home office or not? But what was being looked at is what are the number of business miles? But see, if you have a home office and you are actually claiming it, then your miles when you leave home, when you are now headed towards a business function or a business purpose or an appointment or listing, etc., well, then those miles are going to count the second you leave your home. And see, that has increased the business miles and therefore increasing your tax deduction. Now, also, what we want to look at is not just cutting your taxes, but making sure that you're paying your taxes evenly throughout the year, known as quarterly estimated tax payments. And related to this, this is the number 6 overlooked tax smart item for realtors. And so you don't want to skip these. You need to send dollars in. The only way that you would skip a quarterly estimated tax payment is if you literally didn't make a commission during the time frame in which the quarterly estimated tax payment covers. So you need to right now write down these 4 due dates: April 15th, June 15th, September 15th, and January 15th. Those are the dates that you need to be sending in any kind of quarterly estimated taxes. And the biggest reason why is you want to avoid any kind of a tax crunch. You need to save taxes from each commission, not only to send in quarterly, but then for anything else that's due, you've got to pay that by April 15th. You want to estimate your taxes routinely. And if you or your spouse has an outside position, then you want to take into account what withholdings are coming into play, but also their income. But those withholdings from that job aren't meant to cover your taxes as a realtor. Now, when we're talking about these estimated tax payment due dates, many aren't sure, well, when I hit April 15th, what am I paying in for? Well, in the current year that you are in, April 15th would pay in the estimated tax payments from your activity January through March of that year. When you hit June 15th, it's to cover April and May. So what closings did you have? What commissions, what expenses did you have? What's the estimated tax payment that then would be due, for instance, third quarter, September 15th? Well, that covers June, July, and August. And then when we hit September 15th, we now know we're inching into the final months of the year: September, October, November, and December. Those are so key because that then determines that fourth and final quarterly estimated tax payment. But see, when you're now going through life and you are with your peers and you're wondering, am I right? Am I with the right tax professional? Well, know this: we're only taking on clients that are in our backyard right here in Oklahoma. And I have practiced now with my son. We have a 71-year tradition. But when you're looking to hire a CPA or a tax professional that understands you as a realtor, you have to know that we're not all built the same. We don't all specialize in the same things. And a tax professional that you need is one that speaks your language. So here's 5 questions that I suggest you ask with an expectation of 5 yes answers. And this shouldn't require a lot of stumbling or depends. Now, the only thing this could depend on is, are you making any money? Because if you're a real estate agent and you're not making any money, well, then you're probably doing it as a hobby and you probably don't really care. But guess what? You've made it to here, and here's what you really want to know. Are you really taking advantage of everything you can? Yes, it does come down to who you're working with. So ask, should I set up an LLC or Inc? The answer is yes. Can I take a home office? Yes. Does my mileage count for my home office? Yes. If I am routinely netting 50,000, should I elect to be taxed as an S corporation? Yes. If I am an S corporation, do I need to pay myself wages? Yes. Somebody that knows you, knows your language, knows how you go about business, and has your goals in mind is going to know those answers because they work with real estate agents just like me. Yes, you do want to consider incorporating that LLC, setting up an S Corp. Now, this requires much time to determine should this be a match for you in terms of the S Corporation. But what we tell new realtors is that you need to set up a formal business structure for you as a realtor, as a business owner, immediately. See, that doesn't necessarily determine how you're taxed. When you set up an LLC, that is only a determination of your legal designation in the state in which you are practicing. This does not determine one thing for tax purposes. Now, one thing I want you to note is that in the state that you're in, before you formalize as an LLC or an Inc. or anything to that effect, what you do want to do is check with your license board, your real estate board, the real estate commission, whatever it's called in your state. Consult with them, consult with your broker, ensure that you are able to formalize your business. And if so, you want to ensure that you're registering that business before you do anything else with your real estate board or commissions or license agency or whoever oversees your license. Now, if you are in the state of Oklahoma, do note you will need to register that LLC as a real estate agent. There's huge fines, so you must do this immediately before you do anything else. Register it with the Oklahoma Real Estate Commission, ORIC. Do this inside your license portal with ORIC. ORIC and your broker must approve this before you do anything else. So you want to be sure to consult them. So this is directly from ORIC, and you go to the payment of commission, and that is where you will register that LLC. If you change your address, move brokers, you will definitely need to re-register that LLC. But the biggest thing you're looking at here is there a way to properly save self-employment taxes? Yes, there's a catch. Wages, payroll taxes. But what this does is put you in control. That's what you're trying to accomplish here. Being in control of your business, your money, as well as then your taxes. Now, one of the most valuable tax deductions and number 9 most overlooked tax deduction for realtors is putting money into retirement. Now, many think by picking a plan that's determining where you're investing your dollars. It's not. The difference between a SEP, a simple IRA, a 401k, or a traditional IRA, quite simply, is the dollar amount in which you can deposit into that account. That is then only going to be the name of the account in which holds your money. Once the money goes into any of these retirement accounts, it's then that you decide, does it go in the market? Does it be held in bonds or a money market? So what you have to realize is the reason that this is the best tax deduction is that this is something that's going to benefit you. When we buy an asset or spend money, those things are then gone, those dollars. They're not necessarily put to our future benefit or building wealth for us per se. So with this is money that you're setting aside. So even if you invest the dollars in a money market, you're getting the deduction that you're putting aside. Now, what you want to avoid is a crunch. You want to avoid a panic come tax time. So as you've probably heard many times, but the number 10 thing that small business owners and realtors overlook is a failure to plan, because basically that means you're planning to fail. So don't wait until April to figure this out. Tax planning is something you should be doing year round. What you want to be doing is taking control. What you want to feel is that every day you are getting up, ready, set, go. And so with this, I have round up everything that I have put together for you. And your first step here in taking advantage and becoming a tax smart real estate agent is to sign up and take advantage of my one agent business blueprint. It is on demand for you. And what I would tell you is this: as a CPA working with real estate agents every single day, it is an honor to work with those that are similar to me. You are here to serve your client. You are here to find the best resolutions, the best options for them. You do it 24/7. What I want you to do is give yourself permission right now to put yourself first. You deserve this. Now, how do you go about doing this? Simple. Click on the link, check out everything you're going to get, and take advantage of it today. I want you to imagine that you are in control of your business because you decided right now to click and take advantage of what I'm offering to give you right now. And what if you took advantage of it right now? You'd be able to take advantage of it immediately. And with that being said, thanks for tuning in. I'd love it if you would click, check out the opportunity that I'm giving you, and then become a tax smart realtor, a business owner. You deserve every dollar that you make to go straight into your pocket to keep it for you and your family. I won't let you down.